Hello, my name is Maureen Brennan. I'm a technical advisor for the Federal and State Grants Unit here at the Illinois Criminal Justice Information Authority. This is one of a series of very brief technical assistance recordings that we're posting alongside the R3 Notice of Funding Opportunity, which was made available on March 1st, 2024. Each of these sessions introduces NOFO applicants to important information regarding how to be a good grantee, and to help you strengthen your applications for R3 funding. In this session, we'll take a look at the authority dispersal methods. So we'll cover today the review of some basic terms that we'll be using throughout the presentation. Then we'll explore the reimbursement method, the advance pay method, and then the working capital advance dispersal method. Let's start with the review of the terms. So we'll refer to the Periodic Performance Report, or PFR, which is the monthly reporting of grant expenditures detailed by budget category, for instance, personnel, supplies, contractual. One of the required reports that all grantees must submit. I'll also refer to a cash budget. That's a budget or a plan of expected expenses detailed over the course of the expected grant period of performance. So for each month in the period of performance, we'll expect you to, in your cash budget, to project what your expenses will be in each budget category. So let's look next at the dispersal methods. We have, as I said, we have three dispersal methods: reimbursement, advance pay, and the working capital advance. For the reimbursement method, that is by far the simplest. There's no advance dispersal. A grantee pays their grant expenses. They request reimbursement for those expenses on their monthly PFR. And there's no submission of backup documentation required for this dispersal. However, that backup documentation must be maintained by the grantee and must be made available to the authority upon request. When I say backup documentation, this is the record of all of those expenses that you're reporting under the PFR. So that would be the payroll register for the staff that are working on the grant. Receipts or invoices for expenses for supplies that you may have purchased for this program. They would be the bills for any contractual services, such as your internet or your rent. All of those would be necessary backup documentation that should be maintained and be ready to be made available to the authority upon request. Now, I talked about the cash budget real briefly, that plan of your expected expenditures. The reimbursement method does not require the submission of a cash budget. However, it can be a valuable tool to help you plan for your grant cash needs throughout the course of the grant. Because if you use the reimbursement method, you'll have to be incurring those costs, you'll have to be paying those bills, and have the cash flow to be able to do that, because you're going to get reimbursed for those expenses. So it helps you plan for your necessary cash flow throughout the life of the grant. But it also can help you keep track of your actual expenditures relative to what those projected expenses were. So you can do a little analysis of how your spending is going. Are you on track to spend out the whole award? Are there lapsing funds? Are you spending too quickly? So it can be a valuable tool, even if it's not necessary for the authority purposes. The next method of dispersal that we use is the advance pay. Now, under advance pay, this does allow for an initial cash dispersal for that first month's projected expenses. So advance pay grantees do need to complete the initial cash advance detail sheet in their PFR and their cash budget that will help project their expenses throughout the life of the grant. After this initial cash dispersal, subsequent dispersals advance the grantee their projected cash needs for the next month of program activity. And it's just looking at that cash budget and seeing what you believe you need to expend over next month, and we give you advance of those expected expenditures. And again, the dispersal of both the of those funds is always made through the PFR. As I said, the cash budget is required, so you can do that projection of what your costs will be. The PFR will be the tool that you use to report those grant expenditures each month. And if you elect to use the advance pay dispersal method, your PFR will be specially designed to also include another column on your monthly report where you will project the cost to be expended in the following month. And your grant specialist then will make your dispersals based on what expected expenses you will have next month, minus any cash balance that you have on hand. For instance, if your first month of your program activity, you expected to spend $1,000, and we sent you that $1,000 to get your program started. After the first month of activity, you submit your PFR, and you report expenses of only $800, but you think you're going to have $1,000 worth of expenses in month 2. We're not going to give you another $1,000. We're going to give you what you project, the $1,000 less your $200 cash balance that's on hand, so that you always have just enough money to operate your program for the coming month. Now, advance pay isn't available to all grantees. It does require an initial assessment to determine your eligibility for advance pay. Now, this assessment is conducted by an outside consulting firm that the state has contracted with. You can start that assessment process by letting your grant specialist know that you're interested in this method. Just to give you an idea about what that assessment includes, this is the way that it reads in our policies. That assessment has to provide a reasonable assurance that the grantee can comply with federal and state rules, the 2 CFR 200, and the GOMBI rules 7000.120. As you may know, when the state passed the Grant Accountability and Transparency Act a number of years ago, the state adopted the 2 CFR federal cost principles for the use of every agency that is governed by GATA. So this assessment is just taking a look to see if your agency has a reasonable expectation of being able to comply with these state and federal rules. The way that the contractor will do that is they're going to look at your chart of accounts. They're going to review, examine, and test sample financial reports. They'll review internal control procedures, such as fund transactions, authorization controls, recording controls, and segregation of duties. They'll also review your procedures relating to advance payment, including the prompt payment of contractors or subrecipients. They'll review any documentation demonstrating training and awareness related to fraud and ethics at your agency. And they'll also review and examine the grant budget. So timeliness and accuracy are particularly important for the advance pay because it's set up to give you next month's expenses. And that's why we have to use monthly reporting system. But if you are submitting your PFRs late, or if there's a lot of revisions that need to be made to your, or corrections that need to be made to your PFRs, that's going to add to the timeline, and then your final dispersal of those expenses for next month are going to be delayed. So timeliness and accurate submission of PFRs is the key to making the advance pay dispersal method work. And the last method is the working capital advance. Now, this is a newer method for us. It's designed for grantees who would be unable to begin their program activities without an advance of grant funds. It allows for an initial dispersal of projected expenses for your first 2 months, plus any startup costs. So you get this initial infusion of cash to start the program. So again, that initial dispersal is based on what you reflect in your cash budget. that projection of your expenses across the full period of performance. So we're going to give you this initial 2-month, your startup costs plus 2 months worth of operating expenses, which is based on your cash budget. And then subsequent dispersals will reimburse you for your actual expenses. It does require monthly reporting so that we can always keep that balance that you have on hand as just 2 months worth of operating expenses for the next 2 months. Now, backup documentation of your reported expenses will be requested and reviewed during the first 6 months of your grant. That backup documentation may be requested periodically throughout the life of the grant, especially if we see that there are wide variations between what you report and what your cash balance projected you were reporting. If there are a lot of corrections or a lot of delays in your reporting, your grant specialist may want to take a closer look just to help you make sure that what you're reporting conforms to your actual expenses and that you're doing a good job of keeping that backup documentation. So as we work through the period of performance, your dispersals under the working capital advance plan will be reduced or cease during the last quarter of the period of performance, because we want to be spending down that 2-month little nest egg that we've given you of 2 months worth of operating expenses, because our goal is to have you reach a zero cash balance by the end of the period of performance and not have to owe us a big refund or for us to have to make a big dispersal to you at the end of the grant. So this will be sort of a monthly determination on the part of your grant specialist and their manager based on the cash that you have on hand and the remaining expected costs that are detailed in that cash budget. So that's a brief look at the 3 dispersal methods that we use. This is a full list of the other R3 NOFO recordings that we are making available. If you have any questions about this content or about the NOFO, I encourage you to use the Q&A, submit your question through the NOFO Q&A, which we will post both the questions and the answers on a weekly basis on the NOFO site. Thanks for joining us.